Please start. All right, good morning, everybody. Welcome to Saturday Morning Coffee with Paul at DTS. The topics for today depend on what I feel like talking about the last minute. It's kind of just a freewheeling thing. I've even done this without any topics. We'll take some questions if you guys have any. But I have one main theme here this morning that'll probably take us about 15 minutes or so to get through. And that's a Paul 15 minutes, so it's probably more like 30 minutes. And we'll be done before 10 o'clock. So Saturday morning coffee, November 16th, 9 o'clock. Looks like the time is right. You should have slides up there, and let's go to slide number one. The 29th, this is the daily market letter. Again, this is one of the two subscription letters people pay for that goes out that I want to review. This is from October 29th. And again, the topic here I want to get into, you see the topic of the slide up here? It says, if you say it the right way. Right now, you have no idea what that means. I'm not even sure I know what it means. It's kind of an obscure topic I want to talk about. But the goal of this conversation is to reinforce with you how incredible technical analysis is and how, again, it is really the only way to look at the market for 99.9999% of you, unless you have some extremely special talent. And I don't mean that you used to work in the semiconductor industry, therefore you're an expert on semiconductors. You're nothing. You have to have an extremely special talent that I would bet anything nobody here listening to me has. So on the 29th, big deal here. The midterm bias switched to bullish, which happened midday yesterday. The move up held as long as today holds most of yesterday's gains. It will stay bullish. So this is kind of a big deal. And in this letter that goes out to people, this goes out every morning, and this is the little rating system. This is in there every day. And just to remind you, this long term, this is the big picture. This is, I want to avoid 2000. I want to avoid 2008. This is that scale there. This has been pinned maximum green for 11 years for me. Now, obviously, I've only done this DTS letter for 2 years plus. But going back before that, wherever I was, I did the similar letter. I was always the market guy, and that, people know it's always been maximum bullish to me since I went bullish about a week after the bottom hit back in 2008. So that's never changed. The midterm outlook is, the back and forth on the daily chart. And one of the problems people have is that they don't have this midterm outlook, and they always just stick with the long-term outlook. And the problem with doing that, if we go to here's the SPY, if we go to that, the problem is that means, and I understand for some things, long-term IRA, you may just never be selling these things, that's fine. But for a lot of people, they're a little more active. And if you always have just a permanent only long-term bias, that means that you bought this and you sat with this for, underwater, lost a ton of money, took a month this is a weekly chart, so it took 3, 4, 5 months to get back to even if you hung on to it, being down 10 times what you should be down. I mean, you don't do that, right? You have to learn to recognize these. This was an all-out short by me. This is an all-out short by me. This is an all-out short by me. This was a questionable time through here, and this is what I want to talk about. So the midterm bias is a very important one. You can't just say, gee, the market's up for 10 years, I'll go long every day of my life, because you get killed. Now, there's nothing wrong with the account that you're buying and holding to hold. If you have a multiple month, multiple year outlook, that's great, or at least it has been. That's probably going to be changing in the next 6 to 12 months or so. And then, of course, the intraday outlook. This is a letter goes out every day and includes intraday comments. So that changes every day. You could be in the most bullish environment, and we could be bearish for the day, depending upon what's going on the intraday pattern. So what is specifically said this day was, blah blah blah. You can read through it if you want to, but that's the letter that went out that day. That was on the 29th. So rather than sit there and look at that, and by the way, there's a big negative to this too. So on the 29th, that was that's the 28th right there, I believe. Yeah. So it's right in, actually, let me look at the QQQ. I'm a little more familiar with that. It's the same chart, but so was this day right here, this red bar day. Now, if you look, and I probably am overdue to do that bookmark on the market. I think it's part 4 sometime. I can explain all this in a little more detail. But again, this is a short. This is a short. this was unquestionable. What's happening is that the weekly chart is building up the strength, the power, the proof, if you will, to be able to sustain and move higher. And the problem here was we had this huge run into the prior high, and everybody thinks you break the prior high and that's bullish. It's not. New highs can bring in buying or can bring in selling. So this, and as you know, this is an all-out short because it couldn't support that. This was a very mild pullback, which starts to, kind of build a platform, if you will, build the ability. What you're always measuring is the people who need to sell versus the people that want to buy when you're measuring the possible bullishness. And here you have nowhere where people took profits through here, nowhere that people were able to take money. So when you break to this new high, it created more selling than buying, right? You burned up all your fuel getting here. People need to refuel. So this little pullback in the higher low starts to build a platform, if you will, build a spot where people were able to take some profits. But then we didn't dip much. Nobody got in trouble, and we snapped right back again. So it still was not going to able to sustain it. And again, this is not me in hindsight. This is all outlined in the letters. 100% never bullish at those two areas. Now, where it got interesting is when we make this next higher low here and then consolidate through here. And that's where it got really interesting. And where I started to get in an area where I had to say for the first time in 3 years, I'm not really quite sure, if this is going to do it or not. So what happened was right through here, I was still cautiously bearish. And it was this day right here when you see, because what you have to say is the way you have to look at it is if we're going to be bearish, if we're going to react to this prior high, did we react? And we did. And there's that red bar. We react to it. Okay? So that's expected. That doesn't mean anything, right? It's not what happens, it's the reaction to what happens. So anyone in the world could tell you that red bar may come in there, big deal. The question is what happens after the red bar, and what happened was we gapped up to the top of that red bar. That right there, that day is the whole clue. That was the whole clue right there. Does that make sense, everyone? Again, this is just a summary of understanding how to read a chart, but does that make sense? Why does that not make sense? The gap is the difference between the two bars. We close there and we open there. This is a very bearish day. We closed and we had a neutral day at the bottom of that bar, and then we gapped up big to the top of that bar. See, that's not the reaction that should be happening. If it's going to be bearish, here's your pattern, right? Boom, 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 boom. That red bar should be igniting the move down. The minute that this happens, you know the balance is tipped, the balance has changed. And that's your clue. So then we stop here at this day, and then this breakthrough day was the day. That's where you got to say, okay, right now there's a bullish bias unless this gets whacked. Because you get that peekaboo thing sometimes. You stick your head up above the rest of the area, and everybody sells into it. Now because of this, very good odds that was gonna live. And when the key here is when you gap up this next day and you don't fold up, that was it. And that's when I went bullish bias. Okay. So, I mean, again, this isn't, it's a quick little, I didn't mean to spend much time on it, just a quick little history lesson, but just so you kind of understand in hindsight what I was looking at the time. But actually what I want to get to is this next point. Was that a great call? Well, not really. Why was that not a great call? I mean, it was 100% accurate. It was 100%, it was, shorting here, being cautious here, going long here, fantastic. But why was it not a great call? There's a reason. Why is it not a great call? Jim, you're a genius. You're a genius. Absolutely, positively correct. It was an awkward way to get to the new highs. See, what I like to do is, and what I've done really every weekly chart area for 3 years, I mean, I have to go back 3 years to really say the last time I had this similar situation is that when do I want to get long? See, I want to get long, here, 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 and I don't play the market. I rarely play the market long term. I'm playing stocks, but I want to time the stocks with the market. So I want to get long at the bottom. And the problem is now I'm getting long on the breakout, which means that I already have all of this buying. See from here to here? The genius buy would be to buy here. I did not do that because this chart was too squeaky. Yes, you could look back and say, gee, we ended up going sideways. But there's also this very good chance that that area right in here was going to come down and retest this area. You see what I'm saying? So it was very unclear to me what was going on. So I did not. Well, actually, I did do something in there. I only have, the point I'm getting is I only have two long positions in the long-term account. And I consider four at one time to be kind of maxed out. And if I get partials and take some profits, I could get up to six or seven. But so I only, I'm not, I'm just half of what I should be for this period of time. And that's because I couldn't really find everything I wanted to find. Now I did take one thing in here. I took ATVI. I took it off this bottom right here. So I did react to the bottom in here for one thing. I thought ATVI was also a kind of unique stock. And then on this move here, well, I did take something just before this breakout here because I kind of felt it was coming, and that was Adobe. Adobe was entered on the 28th, which was a day before I officially went bullish on the long-term pattern because I sensed it was. But it's not a great call because I have been, I mean, it's a great call. It's the best I could do. But my awkwardness is I am not as comfortable going long when all this has actually happened beneath me. Does that make sense, everyone? In other words, at least not on the quote unquote breakout. In other words, you're buying the breakout of the top of the base when you came from the bottom, which you should really never do. Now this turns out to be just a big wide sloppy pause that refreshes, which many of these have been, but it doesn't give me the confidence. So it's kind of like, I got two things and they're doing great. Between the two, they're up like 7 risk units, and I already hit first targets on both of those. So they're doing great. I wish I had another one or two positions though. That's all. And it doesn't mean I won't. I just have to wait for the next appropriate setup. Now, individual unique things I would do in either direction. And what was frustrating also was we just went through earnings, and the problem is a couple of my favorite setups were going into earnings. And let me tell you the other one that was really frustrating. And those of you that get the long-term letter, was in there as one of the favorites, and I talked about in the room. But I had an absolute favorite I was going to do next, and that was this Disney chart. Let me make this a monthly chart down here in the corner. I love this Disney chart, right? And then here's the weekly little retest in here. And I started following the daily chart, and then it gapped up this day. And I was waiting for this to gap over this area. Unfortunately, it gapped up so much. I said, okay, I got to wait for it. And then I get this 2-day consolidation on the hourly. And literally this day, I had this set to go. I had a letter prepared for the long-term trader people to say I want to go long Disney over here, over that area with the stop right here. I was going to use the hourly chart like I usually do. And it was, what day was that? It was just the oddest thing. I look over an hour later and Disney's gone. It was just, what day was that? It was the 13th. Look at it. That's a 5-minute chart. So I stepped away for lunch, and I'm like, okay, after lunch, I'm gonna, send out the letter to people, let them know my entry point, and I come back and it's gone. Look at it. And that's because, Netflix, or oh no, I think they released their new streaming numbers and they blew everybody away midday. So I've had that happen a lot where I just can't get the next thing. It never does quite right. And here today, yeah, exactly, Evan. That's exactly what it was. I mean, I usually do walk away. I mean, who would have thought? I mean, I didn't even expect it would go that day. I thought it was going to go the next day, day after, maybe later that day, but who would expect that to happen? So that's just kind of the weird thing I've been having. So one of the more difficult weekly charts since 2016. You've heard me say that before. The last time that I got to a chart where I had to scratch my head and go, I'm not really sure, was 2016 when we had. Well, you see it best on here in here, I guess. This area right. I missed this drop. Which drop? I missed this drop right here. And it's a monthly chart, so it doesn't look like much, but it was a lot. It was a big deal. It was this one here. I missed that drop. I ended up being long again here, but through here I was a little confused. It was a very sloppy pattern going on. So I kind of felt it was the same thing going on here. But let's go back to here, and again, there's a point to all of this, believe it or not. Oh, I was just pointing out here, this was, even though that I did react to that call by this trade here. This is the second long-term position. This is on Adobe, which I took right down here. Both these long positions, one of the rare things I love about these, they both ran hard over 3-4 days and actually hit a long-term target in 4 or 5 days, which you love when that happens. And they both just hit it. So was really neat. No management, no anything, just ran to targets. And Adobe obviously is doing great. It's up like 6 hours or something like that. So and have big targets in mind for that. So that maybe Adobe will do the job for me anyhow. We'll see. But while I say that really wasn't great, I mean it was a good market call, but unfortunately because of the timing, it didn't lend to making tons of money. But 11.14, 11.4, this is a great call. Read 11.4, and this is again the daily market in 11.4. This is printed down below, but I put the excerpt up top in the little opening bell section. But if you can't read that, here it is printed out a little below. We're going to enter here a very common pattern. We're going to see the market gap a little bit to a medium amount every day. It should be 1.0 and 2, and then go sideways for the day. Smaller gaps will leave small green bars, and larger gaps will leave smaller red bars, and every day will continue to grind higher. Every day will continue to grind higher. Um, and here's what's happened. Here's the cues since that call was made. And it's exactly what we've had happen, just this grinding pattern. And how valuable is that to know that? Long term is like monthly charts, right? How valuable is that to know that? See, one of the things I get to, no sense, Glenn, just dollars, no sense. One of the neat things I get to judge is that I have a lot of people email me, not just subscribers and not just you guys members, but just other people who, run across me and want to ask me a question. And I've never had so much where people the last week or so, just every day that they want to short. Every single day you want to short. Now, I like to say I never miss a short. One of the nice things, a little plug for the long-term letter, it's doing really well. But the big thing is that I've never been caught with the market falling, and I mean never. I make more money when the market drops typically than when it rallies. I'm always more cautious on the rallies on extended patterns like this. And that's the neat thing. You could say, okay, market's flying high. Gee, if you just put your money in the market, you're doing okay. But what about when we're not flying higher anymore? This is the grind that we've had over the last 2 weeks, and that was put in there in 11.4. So that was just coming right out of here, and that's what we've had, and that's what I mean by a grinding pattern. It means anytime you just get a little too extended, you have a little tiny small bars. Notice there's no buy setups in here. There's no pullbacks. There's no rallies. It's just a grind. That's what a grind means. It's just every day we keep grinding higher. Now I called this how many days in a row? I called this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I said in a letter yesterday before 17 basically bullish days in a row, and then somebody said to me, "Oh, they're not bullish. There's red bars in there." Well, I guess you can call them whatever you want, but to me, this is just 17 bullish days in a row. They're all bullish in one way or another, meaning, any day that you either have a bottoming tail or you closed above the prior day's high, or like this, somebody would say, "Well, this was a down day." Okay, who cares? It's still a bullish day. You're still above this prior day's high. In other words, you just went up so high that you just kind of took a day off. That's not bearish. It's just the grinding pattern. And we will continue to see that until we don't. Because I want to get through this and people want to get out. And I feel like I'm repeating myself so much. People are going to pull out a bucket and start. But and by the way, since you guys are here, and again, there's no way to know this for sure, but I think this could be an unbelievable bullish run. And this is coming from a very bearish person. I think this could be an extremely bullish run. An extremely bullish run. So it's not the type of, if you're going to wait for the pullback or whatever, I don't think you're going to see it. I think it's just going to be an incredible bullish run. Now, there's no way to know that for sure. This could even lead to the last hurrah. It's even possible. There's no way to say that this far ahead of time. But so how did I know that? How did I know this stuff? When to go bullish? We'd have this grinding pattern. It's all just simply reading a chart. What was the technical reason you thought it would grind? Oh yeah, thanks, Jim. That's actually where I was going to go. Thank you. Well, yeah, there's two things. If you look at the way we got here, it's the very reason, Jim, for which I felt, or that I was not terribly confident on the weekly chart in here, because Let's go back to today here. Because this is a sloppy pattern. What happens is that for the same reason that I was bearish here and bearish here, I didn't think we sustain and move up. And now the balance is flipped. The balance is flipped, in other words. So we have more people that want to buy than want to sell, but it's not one of these purely bullish scenarios. So you have this battle going on still. So it's this case where, it's just like, I'm not following football that much, but I mean, if you have the best football team against the worst football team, right, you're going to get a blowout. You're going to get this big breakout rally, boom, boom, boom. If you have two really equally matched teams, and one just has the edge that day, it just kind of beats the other one. That's what's going on. You're just having the Bears. There's still people that are selling. This pattern is not a beautiful pattern to expect a big blowout move, because you don't have everybody lined up saying, okay, we've all taken our profits. We all want to get long again. Let's go. There's a lot of confusion going on, but the bulls are coming out on top. And yes, part of it is, and actually that is exactly where this whole conversation is going. Because part of it is what you said. You said years of experience. Well, you don't need years of experience. You know what you need to do? You need to go look at history a little bit, right? You need to go look at history. If we go back, I find it on the weekly chart, and I have to find this. Look at some of these areas in here on the daily chart. If you go back on the daily, extremely similar chart patterns have done the exact same thing. Let's go back 6 years. 17. So here we go. Beginning of 17. See here, Jim. Do you see the same pattern here? Beginning of 17. And look at this daily chart move. See this? Look at that grind. This grind lasted for 3 months. This is a grind. I'm going back in history to 2017 and showing you what I consider to be a very similar type of breakout on the weekly chart, where this was not really the best breakout in the world. It's not the best breakout in the world because it had moved this far, was very sloppy through here, and already was a little extendo before it started to move. So it led to this pattern through here. And once we got up here and made that breakout, look at this. There's a little pullback here, but other than that, this is the perfect grind. You see what I mean, guys? It's a perfect grind, right? There's nothing to get, Reg. This is looking at history. This is just saying, here's a similar thing that happened, and it's just the same. It's the same pattern going on, and that's exactly what I expect that we're going to see now, is this exact same pattern. And again, I'm not telling you today for the first time. I said this the day it started because of this, and that is my point. See, part of technical analysis, and that's the point of this slide here, is how did I know that? Well, part of it is exactly what we do. See, what is the argument against technical analysis? When you argue, and there's three topics out there to me. There's fundamentals, there's news, there's technical analysis. And if you've ever heard me talk like in that Friday thing, there is absolutely no argument left. If you haven't heard me discuss fundamentals, you want to have the discussion sometime, you probably heard me enough. There is zero value to fundamentals, period. Zero. Now, I know in some abstract way, I understand, the companies that make money are worth more. I know that. But you will never, ever make money understanding fundamentals. Period. Zero. Zero chance, never. 20 years in the market, I'll tell you that'll never, ever happen. Number two, you'll never make any money listening to news. It's completely off the chart. But the people who like fundamentals, what would they say about technical analysis? What's the argument against technical analysis? I want to bring this to light in case, you're ever hearing somebody say this to you, because I think it's hysterical. It's one of the things that I think is an issue in the world today. What do people say against technical analysis? If you're like, and see, the problem is a lot of people try technical analysis. They don't ever learn it properly. They don't understand it. And then they say, oh, it doesn't work. And then they join this camp of people who say, oh, yeah, technical analysis, that's hocus pocus, right? Right, exactly. Right. It's hindsight. And what they will say is, you're trying to take the past and project it into the future. Right? And this kind of gets to the title of this presentation, is if you say it the right way. Meaning, people today will say absolutely true things, and they'll say it in a sarcastic, demeaning way, and people will start to say, yeah, he's right. Trying to take the past and project to the future is a stupid idea. That's a stupid idea. Half the country runs on that concept. Everything we do runs on that concept. Yes, the past does tell you about the future, right? Why is that a dumb idea? Half the world runs on that. It's the most genius thing in the world. Yes, the past, sure, things change. It doesn't always happen exactly the same. But to make fun of the fact that we're taking the past and projecting the future is ridiculous. It's ridiculous. I had to put this slide in here because you hear this so much today. And again, this is where I want to put up some warning signs. I'm going to mention a political comment, and I don't want anybody to type political comments. This is not about politics. I'm not on any side or the other. I don't care about anything. I just simply want to bring up the point. It doesn't matter who said this. It is just in this arena that you hear in politics a lot today. People will say the most true things and then act like it's stupid, or they'll say the stupidest thing in the world and act like it's a given fact. And people, if you hear it enough, they start to believe it. And again, I just think this is hysterical, partly because I have a legal background. But this was said last week, right? Hearsay can be much better evidence than direct evidence, as we have learned of the painfulness and certainly. I mean, they said that on TV, and some stations get promoting it as the truth. I mean, it is the stupidest comment in the world. It is the dumbest thing you could ever say in the world, and yet people say it, and you keep pushing it, and it's like, well, yeah, that's the truth. And it's the same thing with technical analysis. People who try it and say it doesn't work, boo-hoo it, because they never really understand it. And then they say, well, you're just taking the past and trying to predict in the future. Well, if you don't know how to do it, yeah, then it doesn't work very well, does it? So now, any questions here? It will continue until it doesn't. It will continue, and see, the problem here is that when do you say the move up is over? Naturally, at some point, the daily chart may pull back, right? That doesn't mean the move's over. We could have a several-day pullback and then continue higher. Even if the daily chart breaks its trend, it could be setting up a weekly pullback. So this is where it gets very difficult, and that's why people often have a hard time trying to find a top. So that's why the midterm pattern is so important. There may come a point in time where I'm willing to take a market type short for a 3 or 4 week period, understanding that that may not be the top, but if it is, I got something. If it's not, I'll still make some money. So, and that's where that whole balancing act comes in, and trying to balance out what you're doing. At some point you get to a point you stop taking longs, and you either sell some, or you look for shorts, or you wait for the next pullback. And that's the whole art, if you will, about doing this. It is funny. Let me hit one more thing on the news thing. I don't want to, I just love this topic about news. Do you ever hear the radio ads from? I think their name is Seifeld, Seifeld, Seifeld. So if you listen to like radio stations out here, news stations, one of the sponsors is this brokerage place or whatever they do called Seifeld, and then they have this guy on every day during lunch that gives you the market update. Every day, it's hysterical. I mean, if you don't listen to him every day, you probably don't catch this. But what he literally does is he has two things. He has economic news and he has China. And every day he comes on at noon, and if the market's up, he literally has just come to say, well, traders have cared more today about the economic data than they did the issue with China. Or if China had good news, they'll say traders today cared more about the possible deal with China than they did about the bad economic news. So you could have the worst economic news in the world. The market goes up because it goes up. And then, what do? You say, well, the traders cared more about the fact that somebody mentioned there maybe is an outside chance that in a few years we'll have a deal with China, and traders cared more about that than they did about the bad economic news. Or the other way around. Best economic news in the world, market goes down. Well, and even though there's no news on China, he'll say, well, today some traders, re-enlisted fears that perhaps those talks may not work out. And, so that's all it is. It's just this, and again, he's trying to tell people that these are the things. And they always end with, we are watching all these political environment situations to help you make money. No, you're just telling us after the fact what you think caused it, and it's ridiculous. Yes, Stifle? Is it Stifle? Yeah, Stifle. Yeah, exactly. You heard them? Yeah, I didn't even do this slide yet, Carmen. I just paused here while I was looking at my notes for other stuff to talk about today. So it just makes the whole thing. I just try and keep you guys with your head above the water. Because again, most of you here, there's a lot of you here. And some of you subscribe to stuff, some of you are just here listening. And for those of you that are trying to make it, I just want to keep your head above the water. And I hope you appreciate. I just keep poking at this stuff to keep you in the right direction. That the lazy way is to think you can listen to news and understand the market and make money. It'll never happen. The lazy way is to think you can understand fundamentals and make money from that. It'll never happen. If you want to understand what's going on, you can't keep trying to be smarter than the rest of the world. What you have to do is do what I do, is say, I'm an idiot. I don't know what's going to happen. I don't understand any of these fundamentals. I don't understand any of the news or the effect it's going to have. But what I can do is, I'm so stupid, I'm just going to follow people who have huge amounts of money and kind of tag along with them. It doesn't matter if they're right or wrong. I'm going to tag along for the ride as long as they're right. And that's what you have to look at it as. And that's what technical analysis is. Does that hit home with anybody? Does that make sense? I've said that before. Does that make sense? The whole world out there is trying to be smarter than other people. Um, I've heard, what was it? I see these ads. I get in, for whatever reason, your email really gets passed around. I'm getting more and more and more and more ads from people. Um, and I look at these titles. I never read them, but I look at these titles. And it's these most bizarre things. It's like people trying to say to you, well, here's how I'm going to make money. Will interest rates continue to drop? And if they do, here's what we're going to buy. Well, you don't know that. I mean, or the what will be the result of the impeachment hearings and how will it affect your portfolio? Completely stupid stuff to talk about. Even on the news during the impeachment thing, they're saying, well, holy cow, this is really a bad day for the impeachment process for the president, and the market's up today. What do you think of that? What do you make of that? The market knew about impeachment 18 months ago. It could care less. And that's what I mean. You look at this stuff and you'll always be on the wrong side of the trade all the time. Okay? Monthly chart 2016, it was a battle sideways and took over stage 3, but broke above. Yeah, well, actually, T, again, when you're in that, you may feel like it's a stage 3. And I said this before, but it actually turns out to be a pause, obviously. It's a big, wide, sloppy pause. And that's why in class you hear me say a lot of times that um, you one of the things you should always pay deference to is the trend that you're in, to pay particular attention to that, and that often overrides how something looks. We use these characteristics to try and help tell if it's a 3 or a pause, but I've come back at the end of that class to say, you know what, yeah, there are these things we can look at, but you know what? Always take top billing to the trend you're in, and always assume that you're never, and if you're in an uptrend, never assume you're in a 3. A lot of times it gets wide and sloppy, but everything for 10 years, T, every weekly chart, wide, sloppy pattern, right, has been a pause. Every one. Why? Because we've been in an uptrend nonstop, right? So they're all pauses. Some are just ugly, terribly sloppy, wild, crazy things, right? But I've never ever turned bearish on the big picture this whole time. So last last quick topic, and then I want to talk quickly about DTS, and I'll take any questions that you have. I've gotten, again, this clicks with me because the emails I get. I had somebody, details not terribly important, but one afternoon, um, and yeah, I don't know if I have time to respond to these, but one afternoon, I forgot what day it was. It was 2 weeks ago. One afternoon, the market was having it was in this bullish move, but it was having one of the pullback days. If we had well, here I'll tell you what I know what day it was even. It was this day right here, right there, the little bottoming tail day, right? Because we were down below the low last 2 days, and somebody emails me and says, oh, I think it was somebody got the letter because they said, your bullish thing. I said, I'm really bearish right now. I want to short, and they emailed toward the bottom of that tail right there. And I didn't even reply at the time because didn't see it till later. But what was interesting is that they came back the next day with a comment that yeah, they were right, and then comments for the next day. Well, from the time they mentioned it, we dropped like 30 cents, and then we rallied $2, right? And they felt in their head that they were right, making the bearish call. Do you understand what I'm saying? So we're here. They say, okay, I'm super bearish. We drop from there to there and then go to here. And they said they were right. They were proud of that call. And that's what brings me a slide kind of like, be honest with yourself. I mean, are you really getting this? Now, as you know, I have a ton of free stuff out there. I invite you guys to this stuff, even people that don't subscribe to anything or are part of anything, with the hope for two things: is that one day, if you come to realize you want to get help, that you'll come to see me, and also for those of you who are trying to make it on your own, to give you the best chance that you can, or at least accelerate your process as much as possible, where you can either decide you're making it or you're not, or to get help or not. But be honest with what you're doing is all this says. And when I say be honest, I mean, are you achieving the goals you want to achieve financially? If you're trying to learn to day trade, if you're managing your own money. See, when you ask people how they're doing and they're not doing well, the answers you always hear are, well, I'm almost there. And, I really did well, but I didn't handle it right this month, and I'll do better next month. Well, okay, that can be true sometimes. But if this is month after month after month, you're losing, 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 and you just are hopeful, that's nice to be hopeful, but you have to also be objective and say, where should I be now? How much time have I put into this? And is it worth it at some point to get some help? And all I'm asking you, just be honest with it. Either stop losing money, and please don't ever lose significant amount of money learning to trade. Can't blow out accounts. Why are you blowing out accounts? You just don't do that. The way that I teach you, and even in the free stuff, the way that you're showed, if you go look at videos, is that you would never ever lose a significant amount of money because you only build on your profits. You never ever build on your losses. So don't ever blow out accounts. Set up goals for what you're doing. If you're learning this on your own, set up goals of where you need to be in what period of time. And if you're not there, either quit or get help or change what you're doing. Okay? I just run into too many people that have been trying to learn to trade for 2 years. And I mean without help, just, out trying to pull stuff together. And they've lost 15 times the amount of money it would take them to learn how to trade. And we all have our pride. But it was interesting. There's a breed of person out there that I run across fairly often. And it's not me, by the way, so this is not me. But there's a person out there, and I could see being this person, but it just never been me, that says, look, I'm going to go focus on this. I'm going to run this business, whatever it is, and I'm going to make money. And you know what? I'm going to pay people to clean my house, to take care of my yard, and maybe I can barely afford to do that. But I'm going to do that because that's their job. I don't have a tool in the house. I don't know how to screw a light switch into the wall, and I don't own a lawnmower. I'm going to pay everybody to do everything. I'm going to take every second I have to focus on what I do. And that's a great attitude. That happens to not be me. I like doing a lot of stuff. But that same person, you know what they do when they come to trading? You know what this person does? Because I see this personality style, and I've seen at least a half dozen. They're probably taking classes. You know what this person does when they come to trading? Take a guess. And again, I'm telling you, this is not me. I wish it was me. I think this is the better way to be. No, they come to trading, and you know what they do on day one? They say, sign me up for your class. They say, I don't know what the hell I'm doing. I've never been involved in the market. I want to learn how to do this. I understand it's hard to do. Sign me up. That's what they do, just on day one. I've had people I've never heard of before. Just, there are people that follow me for years. They never sign up for anything. There's some people sign up. I never heard of them. They heard DTS a month ago and they sign up for a class immediately. That's what some people do. So there's those different personalities. And like I said, I'm not certainly not bragging here because I'm not that personality. I kind of wish I was. That is the smarter way to be. I told you I tried to learn this myself 2 decades ago, but I was smart enough after 4 months to give up and well to say I would benefit from getting an education. That's what I finally said to myself. So monthly chart in 2016, we talked about that. For a fighter pilot, is called simulation awareness. Yeah, right, Glenn. That's why we talk about pilots often making good traders theoretically. And actually, we have a couple pilots with me. All right, last quick comments here for the last 5 minutes, and we'll be done. I'll take any questions you have. As you know, I started DTS a little over 2 years ago, and as opposed to other companies, which have you sign up for lifetime memberships and then fold up 6 months later, I, as you know, have done this largely from what I call kind of a very fun perspective. I enjoy this a lot, or I wouldn't be doing it. And I am extremely open and honest with you guys about what I'm doing, what my plans are. I told you I would guarantee you I would be around 4 years teaching you, and that I would update that after a couple of years. We're at the couple year point, and I'm going to tell you that I will continue to beyond that 2 years. So, let's say even from today, probably 4 years, there may be some small changes that will allow me to. My big issue is my time, and this does not take a lot of my time. So I am going to continue to hang around beyond the next 18 months. And well, don't thank me. It's just what I want to do. No offense. I'm not doing it for you. I'm doing it because I like it. And there may be, and there will be one change coming the first of the year. And the change actually, while it will benefit me, it'll benefit you. The only thing that eats in my time a little bit is, 3 out of 6 or 7 weekends I'm teaching on Saturday. And I enjoy doing that. But here's a change that's going to come. Number one, January 1st, the seminar program price is going to go up. It's going to go up to like 47 or 4,900 for the whole program. So that's happening January. But there's something else that's going to happen, and it won't be in place January 1st. It's going to happen the first quarter. I'm going to add to the seminar program a not just a recording of the class, but a home study course. It'll be a super professionally done where it's not just a recording of the class, it'll be an actual separate home study where I will be going through the sections, have little breakouts, even quizzes in there, and that whole type of thing as a supplement to the live. Now, I'm not going to stop teaching it live. I think it's absolutely critical that you come listen to a live person because people have a hard time learning no matter how good the program is. But this will be as a supplement to that for additional learning. And will also allow me to teach a little bit less. So I'll probably be out there instead of every 6 to 7 weeks, or maybe every eight weeks or so like that. Because you'll have this in between. It'll also allow people to sign up for the class anytime they want to, because you can really start with the home study part. It doesn't matter if you listen to me live first or not. So now, again, this will come in an email to you over the next week, but I just want to be clear when I'm saying that that will not be in place January 1st. It'll be in place over the first quarter sometime, one class at a time. Yeah, and of course, you existing seminar people, you will get this as part of your thing. I've told you, once you pay for education, you never pay another penny. So you guys will get that as part of your curriculum. But more importantly, for the people, it struck me, a couple people that signed up said, gee, I'm really slow learning and, blah, 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 and, it's going to take a long time. So this will, I think, accelerate the learning process to some degree. I mean, some degree you have to have some seasoning and calibration set into you. You can't just listen to something, 3 times in 3 days and necessarily get it the same way you would if you listened to it once, tried it a couple weeks, listened to it again. But it will accelerate the whole learning curve, I think, to some extent, and it'll be the answer for a lot of people who say, gee, I'm not good in a class situation, I'm too hurried, and I like to repeat stuff a lot. So this will be that for those people. Now, it is going to take a fair amount of work, unfortunately, all on my part, because I'm the only one that can do that. Not something I could push off to anybody, so it'll be something I'll be working on during the first quarter. It'll be rolled out one class at a time, class 1, class 2, class 3. But what I do want to mention is, for those of you who are considering taking the program during the next 3 months, it may be to your benefit to sign up in December before the price goes up, and you will have that benefit. It may not be there in January, but it will be there starting to roll out in February, March, okay? Any questions? Let me know. And that's all I'm really looking to change. Nothing else takes me a lot of time or is very, much of a pain. If you got the email, ta-da, holiday gift certificates from DTS. Somebody suggested this to me. This was a 10-minute project, so I did it. If you want to get holiday gift certificates, you have them in your email, or let me know. I can send it to you. No, Glenn, I just said that I promise everybody that when you sign up for education, that whatever you pay, you'll never pay another penny for anything that's added, for anything that's changed, for anything that happens. And I continue to hold to that promise. Yeah. So, not services. Naturally, if you want to join the room or get a letter, that's additional. But in terms of education, I've told you any classes that are added, if they would be added for some reason, any additional sessions, I would never. And as you know, you guys get, coaching, whatever you need. So that does not change. And that'll just be given to you as they are rolled out. But I think think the big thing is for new people, I think there's some people that are hesitant because just getting the class is a problem. And I also want to emphasize you cannot learn this by just listening to a video and that's it. I mean, you need the live instruction, you need the follow up. You need the follow up. You need to have somebody constantly coming back and and you saying, "Here's what I'm doing," and me saying, "No, that's not right. That stinks." You listen to a video series, that's all you do. How do you know you're doing it right? And you know what? People fall asleep in videos. They listen to them, but they're not really getting the full point. Even when the video is done, that's one take of what's going on. Whenever I do the presentation live, as you guys know, we always go down a different path a little bit. You know what I mean? Right, Glenn? You're there all the time. We always go down a different path. So a topic will come out and boom. So if you added up everything I said in every seminar, it probably adds up to being almost two seminars. I mean, at least 50% more, right? I mean, every 8 hours of instruction, if you added up every word I ever said, unique word, it probably comes out to 12 hours because every day we focus a little bit more and go down a little deeper, different paths. So that's the type of stuff I think is just critically important. And a video, while it's good for review of the general stuff or a home study course, again, it's one take of it. It's one thing. And you're not getting people asking questions. You're not getting, you may have questions that live you would ask on the video. Maybe you never get around to doing it. So I think the whole process is critical to do that. Oh, Andre says just if you have, as a seminar student, whenever you have questions, you send me emails. And when you send me emails, if we want to get together in a room to discuss them, we get together in a room and discuss them. I've encouraged you guys every class to do that. To follow up with me. Right? There's a proper way to do it. The expectation is that you've taken your trades, you verify that they're meeting your plan, and they're not working. Send them to me. I'll look at them. I'll email you back. And half the time when somebody emails me, I say, let's just hop into the room for a minute because it's easier and faster to talk and look at charts together. That's all. So, thank you, Jim. Thanks, Andres. Yeah, yeah, true, Peter, true. So this would be the best of all worlds. I will continue to do live. Like I said, the schedule may back up a couple weeks. I've been doing it pretty religiously every 6 weeks, so there's 3 weeks on, 3 weeks off, unless there's a holiday in there, something like that. So I'll probably take a couple extra weeks off in there, but we'll still be doing them live, and there will be the home study. And again, just the home study will not be ready January 1st. It'll be rolled out over the first quarter. But the price will go up January 1st, just FYI. There will be an email about this. I'm sure you'll see, or more than one. And is that it? Are we done? It is 10 o'clock exactly, and look at this. And oh, I didn't even mention too, don't forget through the end of November, there's a discount on the gift certificates when you buy them. So some incentive to get loaded up and give the gift of financial freedom to somebody. All right, guys, have a great Saturday. We'll see you Wednesday night, or for those in the trading, we'll see you on Monday. Take care.